reading breakouts. All right. Now, another consideration that we look for to offer immediate resolution to a congestion pattern. You can see the congestion pattern here on the U.S. dollar index. All right. It's a ascending channel. All right. This is a very tight channel, actually. We only have the top here at 10,764 down to the floor at 10,650. All right. So a channel that is only about 100 points wide. That is exceptionally narrow considering how active this currency typically is. So looking for breakout is essentially establishing what can drive it and what can generate the level of follow through. So we typically look to event risk to provide us with those that necessary push and the follow through that we would expect. All right, we've talked about themes, we've talked about event risk as we assess an overall fundamental picture. All right, and of course, market conditions is where we see a lot of the potential for that follow through. We had a lot of event risk this past session. All right, and there were some noteworthy moves from the Aussie dollar, the British pound, all right, even some very substantial moves in the Canadian dollar. All of this was generated from event risk. All right. Meaningful event risk that was able to force breakouts. Now, the follow-through potential of these pairs is differing. The considerations of whether it can actually force a breakout and whether we can find follow-through, that is a level of severity. All right. Can these three pieces of event risk provide both breakout and follow-through? Well, let's look at actually a Canadian dollar-based pair. CAD-Yen. I would say this is an inevitable breakout. You can see this rising trend line, and there is a general resistance here at 97.50, and furthermore, there is a new one around 99 even. So there's a breakout potential here, but breaking this larger range is not necessarily an imminent threat. All right, it's quite easy actually to hold up these boundaries as we look for something to generate volatility and generate the follow-through necessary to make a breakout meaningful. All right, so that Canadian the Canadian Bank of Canada rate decision that we just had is probably not enough to force a breakout here, although it did break in a shorter time frame, this congestive price action. Now let's look at a couple other pairs. All right, the euro pound was actually a big one that I flipped, took a loss on the long position and jumped in on the short after it made its break, but this is a larger wedge formation, and this actually introduces a new concept, the proximity to our technical level support or resistance when we meet that data. So we were at the very bottom of this channel, trading very close to it, when we were heading into the release of the UK jobless claims, as well as the BOE minutes. All right, so there was a good potential here for a volatility event, and it just so happens that that volatility event supported the British pound, a break to the downside because the technical levels there, the break is good. And actually, as it so happens, the fundamentals that the data supported, the themes, were better for trend. Add to that a larger bear trend overall, and this actually has a little bit better potential for follow-through. All right, so now we have a breakout and follow-through circumstance. This is unique. There aren't many pairs out there that really have this level of potential. All right, but this is a very good event. Now I want to look at some ones that are a little bit more active. All right, and certainly the ones that you guys are probably going to be a little bit more interested in. Euro USD. So we have a pretty tight wedge pattern, as you see it here, between these dotted lines. This is essentially a floor about 135 and a resistance at 135.80. All right, so it's a relatively narrow wedge. Now, when we measure the inevitability of breakouts, we can look for event risk, and certainly for the Euro USD, we do have some meaningful event risk for the Eurozone. The Eurozone Composite PMI and the country's PMI, individual countries' PMI. This is a noteworthy piece of event risk. This is essentially a timely update for growth for the region. All right, so you could definitely get a bolt of volatility from this kind of event risk. And we are at the very boundary of this wedge. Right? This is only a 70-point range or 80-point range, and that doesn't give us a lot of room to move. So Those two factors combined suggest that this is a high probability breakout. And if we do actually have data that is not supportive of the euro, we jump back down to 135, and we have to cover more ground. We lose some of that potential for break because we are not at the very cusp of a breakout. You best served on a breakout based on data when you're at the cusp. All right, but there is certainly a good probability. I would put this at a probably 75% chance of a breakout in the coming 24 hours. So this Euro USD looks good, but what about follow through? Does the PMI figure tap into the underlying concerns? Not necessarily. We're talking about relative monetary policy for the Euro USD. That's the bigger driver, and we don't have the big catalyst for the US dollar likely until next week when we have the FOMC rate decision. You also have to consider, look how congestive this price action is. It's actually an 8-hour chart. This is not very good at generating the big swings that we would look for. And this move right here was actually based upon relative monetary policy. So this might not be a worthwhile trade for those that are looking for something more than just the initial breakout. Let's look at something that is actually a little bit more aggressive, or actually less aggressive. Similar currency, similar conditions. Euro yen. All right. This has been a very tight head and shoulders pattern. People are getting very agitated. They want this to break. They want to see something fulfilling here. Now, a break to the upside is a strong probability because you actually have a dominant bull trend. However, most of us recognize that a drop to the downside would actually carry a lot more momentum or a lot more volatility. Not just because there's open ground that you can retrace and that there has been a lot of leverage into this position, but also the fundamentals that support it. A drop from the euro yen that has meaningful momentum would be risk aversion. All right, a big fundamental theme. Now, that being said, there is not necessarily a clearly defined range here unless you're really zooming in and you're talking about this 141.80 down to 141 range. 80 points, once again, very tight. But breaking out here can quickly lead us into some resistance up at around 142.50, 142.75, or down to this neckline on the head and shoulders pattern. All right, so this is not necessarily a breakout that I like because, one, fundamentals for risk trends are not there. Two, you have further larger technical boundaries just beyond. Now I want to look at something that is an inevitable breakout, and it is certainly at the very end of its congestion pattern. All right, S&P 500. This is one I actually posted on the real-time newsfeed, this chart, but I've actually extended the trend lines here. As you can see, this is a breakout potential out of necessity. The rising trend line that we have here, coupled with this range high at 1850, leaves us a termination point at about 128. We will, or January 28th. We will never get there. Why will we never get there? Because, as you can see, this gets smaller and smaller and smaller as we move into this wedge. So a breakout is inevitable. That does not necessarily mean, however, that you're just going to, let's say, break 1850 and all of a sudden it takes off 100 points. A breakout can be just a move beyond the technical boundaries that goes almost nowhere. All right. It's important to differentiate between just the breakout itself and the follow-through in a trade. But when you're looking for the elements that add up to a successful breakout trade, a breakout into trend, you can identify instances like this where you have to have a technical breakout. All right? And you can see the backdrop conditions where activity levels are very low and likely going to reverse, the contrarian view. If you can couple it with some meaningful event risk, though I don't see very heavy level event risk for risk-based trends in the upcoming 24 hours, then you can actually establish what the possibility of follow-through is. All right? So looking at a breakout trade is not just identifying the technical level or finding a very attractive piece of event risk. Right? It's putting the entire thing together. Finding the technicals, finding the fundamentals, establishing market conditions, and seeing whether it's just going to be a breakout or a follow-through. And then from there we can set up our strategy accordingly. Remember, everything in this market, everything to do with trading is a probability. And the best we can do is put the probabilities in our favor. All right? So hopefully this helps you view some of these markets, and it's especially interesting when we look at something like the S&P 500 or Euro USD in the upcoming 24, 48 hours. So keep an eye on these markets. Let's see what happens. Good luck trading out there, guys, and we'll do another strategy video tomorrow.